Imagine for a moment that you had an investment that consistently loses 20 to 30% year after year after year. Wouldn't you take every action possible to stop that from happening? But that's exactly what will happen with your tax-deferred IRAs and 401ks. You see, these accounts have never been taxed. And when you eventually take withdrawals, either forced or voluntary, you will pay taxes on that distribution. So if you have $1 million in your 401k, you don't really have $1 million. You have $1 million minus taxes. And if you don't know what taxes you will pay when you take the money out, do you really know how much money you have? And that's a problem, because taxes are probably going up. It's a near certainty that taxes will increase in 2026 with the expiration of the Trump tax cuts. And many smart people who think about this stuff all day long believe it will go even higher from there. Former U.S. Comptroller General David Walker says taxes will have to double in the next 10 years to pay for what Congress has already committed to spend. And that's not even counting all the unfunded mandates. National debt now stands at nearly $34 trillion, nearly 3 times higher than pre-COVID levels. Jamie Dimon of J.P. Morgan says the United States is spending money like a drunken sailor, and for the first time in history, the interest on our national debt has exceeded what we spend on national defense. At this rate, the government will soon be spending nearly 25 cents of every tax dollar collected on interest on the national debt. And that basically eliminates the ability of the government to spend money on anything else. And that's why we've developed our Getting to Zero project. Getting to Zero is a strategy of systematically transitioning your taxable retirement plans into tax-free accounts such as Roths, in an efficient and orderly process over time. And with the economy and the government in disarray and an uncertain tax future, we believe this is one of the most important topics we can undertake as your financial advisor. And yes, taxes will have to be paid in that process, but we believe it's better to pay taxes now at a historically low and controllable rate rather than a future, unknown, uncontrolled, and likely higher rate. And then once it's done, it's done. And everything after that is yours to keep. And I know, it goes against all logical thinking to pay taxes on your retirement accounts now. That is, unless you believe that taxes will be higher in the future, and then it makes all the sense in the world. So if you believe as I do that future taxation is a problem, please reach out. We'll be happy to do the math and analysis to help you understand what to do next. Or take a look at our Getting to Zero page on our website at Vaylark.com, and you'll find additional background on the subject. Imagine if every single one of your retirement dollars was in a tax-free scenario and then taxes go up. Well, twice zero is still zero. Give us a call and we'll be happy to show you how to get to zero soon.